Good afternoon. Once again, this is James from the Wall Street Minute, standing right in front of the New York Stock Exchange. And people are asking me a lot of questions about tariffs. There's been a big concentration on the Smoot-Hartley Tariff Act of 1930 that seemed to usher in the Great Depression. What a lot of the media, of course, forgets to mention that it was coupled with a massive tax increase. Now, prior to that, in 1922, there was an equally large tariff increase, which basically ushered in the sort of booming, roaring 20s. So I think the big question is, hopefully nobody in Washington is going to be dumb enough to want to raise taxes in this environment. The second thing that was sort of interesting about all this is there's been a strong argument to say that you could raise tariffs a bit, perhaps, in a booming economy, but in a slowing and descending economy that could spiral into a big mess. And I think that's what people are a little worried about right now. The other thing that's kind of interesting, and I think people ask me a lot of questions is people continue to ask me, why is it okay for other countries to tariff our goods, but it's not okay for us to tariff their goods? And this has always been my big issue with the free trade, the free traders, the U.S. Economists that promote free trade, is I can't figure out how we get free trade when we don't charge a tariff, but other countries charge our goods a tariff. That doesn't sound like free trade to me. That sounds like we're getting, you know what I'm going to say next. Anyway, the answer to that is perhaps, at least if you really dig around, is a lot of people would argue and say, hey, the U.S. is disproportionately the largest economy. Tariffs in the U.S. have a disproportionately large effect on other countries. And the U.S. dollar is kind of is the reserve currency for the world, so that kind of also impacts things. I'm not sure I buy into any of that or any of that argument. Now, on the upside, which is one of the arguments that Mr. Trump put forward, raising tariffs, is countries like India and Taiwan are speeding up their bargaining, and both countries are looking to basically get rid of their U.S. tariffs. And Taiwan is actually sweetening the pot by promising to invest a lot more in the United States. So that's kind of interesting. I believe Israel is also doing the same thing, and there's one other country which I can't recall offhand. So I do think what you might see is this might lead to a slow beginning and a lot of dissension, but a lot of countries are going to jump on the bandwagon really quickly if they see a big trading partner like India ends up with a good a real free trade deal with the United States. I think that might lead to a sort of an avalanche of people rushing to try to sign up really quickly, because no one will want to be the last person left at the party. Anyway, this is James once again from the Wall Street Minute, standing in front of the New York Stock Exchange. Where is it? In front of the Buttonwood tree, and we can't seem to find it back there. It is somewhere back there. Standing in front of, there it is, standing in front of the Buttonwood tree. Say hello, leave comments, and of course, subscribe to these videos.